Hello everyone, this is Alexander Nikolov. We are in the middle of November and I decided to produce a video for you because I haven't made one for a month or so due to my travel arrangements. As you know, I traveled to California to participate in a personal development seminar. So let's take a look at all the markets that we normally cover on our website. Let's start with the forex. This is the daily chart of euro dollar, and as you know, 4 weeks ago, I was bullish and I expected to see a move higher toward 145 and then eventually toward 150 levels. However, after the initial rally, the market failed in early November, and actually the decline in November confirms right now. It is safe to say that obviously the consolidation, the downside correction actually from the May top is not over. Most likely we have seen the low for this bear market. That's still my opinion, that we have seen the low, but right now I still expect to see some choppy trading in the next few weeks with mild downside bias before the bulls can regroup, and this downtrend here, this down move, actually it's not a strong downtrend, it's more of a sideways consolidation with downside bias, but still I think that this down move is not over, and it will take some time, a couple of weeks or so, before it is over, and then the larger degree, if we go to the weekly chart and actually to monthly chart, I expect this sideways consolidation from the 2008 top to end, and maybe it has ended already at last month's low, the October's low, but to confirm that, we need a sharp move above at least 145.70 on the larger degree time frame, and as on the daily chart, we need to see a move above. Let's see here, above 138.60, 138.70 level to confirm that this down move here is over, and that in turn will confirm that the larger down move from the May top is over. Let's quickly go to the other forex markets that we cover. This is pound dollar. Here the picture is more clearer. Actually, from the August top, we have a move down followed by a pullback that actually retraced almost exactly 61.8% Fibonacci retracement level, and it seems right now that the British pound resumes its downtrend from the August top, which means a low below 152.60, most likely toward 150 area, is coming in the next month or so. So I'm bearish here. Last week I thought that a rally toward 163 was possible, but the recent development, the last week's development, tells me that most likely this counter trend move here is over, and right now the British pound resumes its larger degree downtrend. Going to the weekly chart, it's important to know that as you know, I expect to see a broad, huge sideways triangle here from the early 2009 low, and right now we are in a wave D of this triangle, which means the prices should fall to at least 150 area, probably slightly below that level. Another rally would follow in early 2012, but eventually I expect to see much lower prices below 135 level. That's the larger picture here. Okay, let's go quickly to US dollar Japanese yen market. Here the move down is quite choppy and slopey actually, but still notice that these sharp moves higher that were obviously due to currency interventions they all found resistance either near the 100-day moving average or near the declining 200-day moving average. So all that tells me that the trend here is lower, and we can expect lower prices going forward. My long-term targets continue to remain. Actually, my short-term target is near 74.50, but the larger target, the long-term target, is near 68.70 level, and I still expect these levels to be seen in the next several months. But again, this market is quite slow, quite boring. The main focus is definitely on the downside, so I would not consider a long position here right now until the 200-day moving average flattens out and turns up. So those rallies that are caused by forex interventions should not be trusted, and actually they should be used as selling opportunities. Let's jump to the stock market. Here the picture is quite mixed. This is the chart of Nasdaq. Okay, actually let's first start with the chart of S&P 500. This is the chart of S&P 500 index. Last week I thought that this counter trend move from the early October low is likely to continue higher toward at least the 1305 level. So I was favoring a long position here against 1210 level. However, what happened last week is that we saw a breakdown of this out of this small triangle here that you can see right here, and that's of course negative. The fact that this triangle was broken on the downside tells us two things: that either there was no triangle here, and simply the market will find support probably near 1180 level, and then would resume its uptrend from the October low, or more likely the market, the entire corrective move from the October low is over, and in this case a larger move lower toward 1060 and even much lower lies ahead. So the picture is mixed here, but right now the odds favor a move lower. Why? Because the prices are below the 100-day, the 200-day moving averages that themselves trading sideways, and below the 200-day moving average that has turned lower. So right now, and of course we have a breakdown of out of a bearish reversal triangle here. So right now the main focus should be on the downside as long as the prices stay below 1265. And only a move above 1265 would tell us that the market is stronger, and it can, in this case, it can not only move to 1305, but probably make even a new high for the year. But right now, the odds favor the downside. And finally, a very quick view at Nasdaq. Similar picture. Nasdaq was looking even bullish, was looking even bullish than S&P, more bullish actually a week ago, because it was hovering near its tops for the year, and it was just a matter of time. Actually, it appeared that it was just a matter of time that it could break to new highs for the year and go much higher. But what happened last week? Again, we saw a breakdown below the important 2285 level, and right now the price is trending lower. So this trend here is can be defined as sideways, but the immediate pressure is on the downside as long as the 2322 level acts as resistance, and particularly if we see a move below 2184 level, which is not only a larger degree Fibonacci level, but is also very close to notice that 61.8% retracement of the move from October's low to November's top. In this case, if we see a move below this level, that will be a very strong sign that the larger a larger move lower lies ahead. So that will do it for today. Thanks for watching, and I'll be talking to you later. Thanks.